Hey, welcome to part 2 of this little series on Bollinger Band Squeeze trades. So if you want to check out part 1, go ahead and click on the link that's in the description below. I'll link to it there. But today we're going to move on to something really important, and that is how to evaluate a Bollinger Band Squeeze in an objective way. Bollinger Band Squeezes can be a little subjective. You know, what is a squeeze? How do we define a squeeze? And you just look at, okay, well, the bands are kind of narrow together, and as soon as you say the term kinda, well, you're in the world of subjectivity. And with my trading, at least, I like to be very objective, measure everything mathematically. It's black or white, yes or no. It's very binary. So here's one tool that I use that you might find helpful. So here, well, of course, we've got our Bollinger Bands here. Okay, by the way, I'm just using the standard indications there. Let me pull this up so you could see. So I want to say standard. This is it. So length is 20 and standard deviation is -2 and +2. Simple moving average. Okay, so that's what I'm using there. Now, when we go over to define how tight is a squeeze, how squoze is the squeeze is another way of saying it. That's what the professionals use. That's professional terminology. Maybe not so much, but it's kind of funny. So what we got here is I'm going to bring up this little indicator here. This is ThinkOrSwim, and on ThinkOrSwim and other charting platforms may have this as well. Actually, I know a lot of them do. Some do, some don't. Ask your charting platform if they have it, but it's called the Bollinger Band width. Again, it might be a little different term depending on your charting platform. So the width. Now, bandwidth is usually what it's called, bandwidth. Then you get the bulge. I don't mess around with the bulge too much, and then you get to the squeeze. All right, so we got a Bollinger Band bandwidth. We've got to plot that. That's showing how far away the upper and the lower Bollinger Bands are away from each other. That's what that is. Okay, bulge is when you get a big change, big width between them. I don't show that plot, so I just uncheck show plot. Now squeeze, here's where we can objectively measure it mathematically, and I've got that colored red with dashes. Now my settings here are again the standard Bollinger Band settings with 20 and 2 +2 -2. Bulge, I'm not using it. It defaults to 150, by the way, in ThinkOrSwim. But since I'm not using that, I don't change that. But squeeze, I do change. I don't like 150. To me, that's too long. So I change it to 50. You can change it to whatever you want. Okay, but I think the big numbers, if you have a big number there, you're not going to get as many setups. And I found this to work really good for me. So here's the width of the Bollinger Bands. And what we're going to do is, now you notice the width thing changes because what it's measuring is over the last 50 bars. And that's changing from time to time as the market volatility changes. And this is really important because a squeeze, as defined by the width of the higher band from the lower band, it's a relative distance relative to however many bars ago. So we don't really want that static. We want to be able to monitor this based on the current market condition and what the current volatility is and has been in the recent times, because that's going to change. So that's why this dotted red line changes, or dashed. So here's basically what I do. When this comes down and they cover, or green line gets below the bandwidth line, gets below the squeeze line. Okay, here it's about the same. And then I wait for it to go back up. So I'm looking for the bandwidth line to go up above, and this is true either way, whether you're going long or short. It's going above, meaning that now, we are getting a increase of volatility. So when they come down and they touch, or the green goes below the red, that means we're in a squeeze condition, but that can last for a little while. So then the next question comes, when? The timing. When should I take that trade? Because you can get stuck into these narrow range Bollinger Bands, right? And that can go for a while. It's called consolidating low volatility market. So then we need a trigger. Well, when do I take this? And I wait for, again, the width line to get above the squeeze line. And that happens right here. And bada bing, bada boom, off we go. Off to the races. Now, for top dog traders, you know that's actually an exhaustion pattern up there. But so cool. We get, a nice impulse move. Fast winner. Goes from about, 20 to 26. Real fast. And boom, just take your money and run. So low risk, high reward trade. I would just place my stop right in here. I wouldn't let the market go beyond the mid band. I don't have the mid band on here. Definitely wouldn't put it all the way back to there, because then your squeeze is done. I mean, the squeeze didn't work. But this is an objective way to do it. Let me show you one more example here real quick. So now I want to show you an opposite direction. I like to show long examples and short examples. So here we have a short example, Bollinger Band Squeeze to the short side. So this is where the two lines come together right there. As long as they're together, I'm not going to do anything. I got to wait for the Bollinger Band width to break away. So do a little arrow here, Bollinger Band width to break away from the Bollinger Band Squeeze line. Now you'll notice that, again, the width line, bandwidth line, is going up, but that's not directional. It doesn't mean the market's supposed to go up. It is just a pure volatility signal. It just means that volatility is increasing, but it's not telling you if it's increasing to the upside or the downside. In other words, bullish or bearish. It just says volatility of itself is increasing. So this is still a trade we want to take to the downside, but volatility is increasing. So it's not a directional trade. It is a pure volatility trade. A lot of people use these with options where they're just doing pure option trades. I personally do Bollinger Band Squeeze directional trades. And when they fail, I'll actually quite often take them to the other side. Timing also becomes very, very, very important here. It's not, you could trade this just like I'm describing here, where you time it just when the Bollinger Bands, or the Bollinger Band width, the bandwidth, breaks above. Oh, I got black. That's not good. Hold on a second. Okay, let's change that color. So you could trade it right at that time. Okay, but if you trade it at that time, you're entering right in here, which is not really the best time to take the trade, because at this time then the market moves up a little bit. So if you go short here, you got to take a little heat as the market retraces back up. So we measure different energies of money flow with different tools. This tool is purely meant to measure the money flow of volatility, the energy of money of volatility. Now, direction is another energy of money flow, and cycles is another one. And so I have a cycle tool, or a cycle indicator, that shows me exactly when to get in, when, and that's timing. That's why we call that cycle indicator. When to enter to the penny, to the pip, to the tick. I mean, literally to the pixel on your monitor. It's that precise. It's that accurate. It's the surgical tool in my trading arsenal. So if you want to get that, I'd be happy to share that with you. I'll be happy to give that to you, and then with education around it as well. So just go to indicatorwebinar.com. And it's a recorded webinar now, so you can watch it anytime you want at your convenience. And I'll show you how to set up the cycle indicator. It's a modification of an indicator on every single trading platform out there, so you don't need anything special. You don't have to download anything, but it is amazing. It is one of the best things I've ever come up with. And, sometimes the simple things are the best. It's simple, but it's also free. And you can adapt it into whatever trading system you're already using. So anyway, hope you enjoyed this video. Feel free to subscribe, like, leave any comments that you might have, ask any questions. Love interacting with traders, and I hope you found this video helpful.